The top story this evening, and the World Bank has some strong words for India in its most recent India Development Update for 2017. Now, the report says that India was poised to grow robustly in FY17 until demonetisation dented growth. According to the World Bank, the cash crunch affected activity in cash-reliant sectors, and the report is betting on a pickup in economic activity in FY18, pegging growth at 7.2%. Now, for FY19 and FY20, growth is seen at 7.5% and 7.7%. Regarding the goods and services tax, GST, the World Bank says that key policy and administrative challenges remain. And my colleague Rituparna Bhuyan caught up with Frederick, who's the World Bank's India economist. Here's a slice of that exclusive conversation.
Okay. Thank you so much for joining us. This update, takes into account several issues. Let me start with one because this update is perhaps one of the first critical analysis of what happened during demonetization. It says that in FY17, cash-dependent sectors were impacted, and perhaps there was an impact on growth. And secondly, and more importantly, it says that 80% of the money is back as deposits. In the backdrop of these findings, how do you overall see the demonetization drive that was carried out by the Indian government?
So just one small correction is that what we see from the RBI data is that the cash in circulation, the cash with the public, is back at about 80% of what it was before demonetization. So that's a sign that the economy has now, things have normalized at about, this level of 80% of what it was before, and about, 20% or so of the money has actually remained in the banks. So in terms of, we would like to focus more on the longer term, right? So we see that the main objective of demonetization, what was it? To actually tax the black money and to actually increase the resources of the government so that they can invest in things like early childhood education that we were talking about, or infrastructure.
Right.
And the second is to boost the digital transactions.
Right.
I think that we find that the government was successful in taxing the stock of black money, and now it needs to actually sustain the enforcement so that it maintains the higher level of taxation going forward. And for that, actually, the GST acted very well as kind of a bit of a sticks and carrots. You had the stick of demonetization that forced people to go and pay taxes, maybe sometimes for the first time. But then with GST coming up, that is the carrot that is say, well, if I continue to pay taxes now, with the GST coming up, I can claim input tax credits. I'm going to be uncompetitive if I don't register with the GST. So the GST and the demonetization, they actually work hand in hand to increase the formalization of the economy. And going forward, we see that definitely as a positive.
One expectation was that the additional deposits will perhaps lead to more credits going out from the banks. But the report says that has not happened, and instead the money was used actually in buying government bonds.
Well, I mean, the banks will look for, what is a safe way to put the money. In fact, in the short term is understandable because you don't know how much of the money will come out, right? So that all that money came in by December 30th, and then the banks don't know exactly how much of the money would go out. So there is a certain prudent kind of attitude of the banks to not lend all that money at first, but actually hold it in liquid government securities, that as the money goes out, then the banks are able to quickly sell that and then give the money to the customers.
Right.
Now that the amount is actually stabilizing, one would have to see whether the banks use some of these additional deposits, because there does seem to be a level increase in deposits from pre-demonetization for higher credit growth. But for that, I think that most of the commentators would say that a more decisive kind of action on the NPA section, on the NPA area, is going to be important.
All right, let's take it to another